Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you would like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at UK feed wheat. This is one of my favourite, if not the favourite long term chart. Why, you may ask? Well, I have no other chart that has a 1975 to date uptrend, and that's currently at 64.45, and that is still valid. I just love that. I could also lather this long-term chart in long-term patterns, but I won't, because it will obscure what is really going on over the last few years. Thus, there is no 2004 to 2016 bullish pitchfork, nor any more recent 2019 to 2021 bullish pitchforks either. Now, they may be valid, but they will obscure the picture for others, in my view, more important patterns. So we'll start with how the market in October 2020 punched up through the 2012 to date downtrend, currently at 176.80 and about to be retired. Then carried on higher, up to the congestion seen in 2012 and 2011, between 210 and 215, and failed after a few months of trying higher, with a counter to the counter bearish dark cloud cover pattern in May last year, and then dropped down to what looked like the previously broken downtrend. However, I suspect the support, though evident there, was mainly drawn from somewhere else. I believe it was, on a closing basis, from the middle time, currently at 86.15, of the 2016 to 2019 bullish shift pitchfork. Now, this middle time was breached in July last year by quite a way, but the market still closed over it. And I lay the recovering pullback up at the door of the number of supports. These are, well, I've already mentioned the middle time and the broken downtrend. To these, I'll add the 2 and 3 year moving averages, currently at 188.55 and 175.30 respectively. The lower time, currently at 179.30 of the bullish Andrews pitchfork for the same move as the bullish shift pitchfork. The Fibonacci congestion at 169.05, and finally the approach to the 5 year moving average below, currently at 166.25. I suspect that all, but the 5 year moving average, all eroded the decline, and the 5 year moving average caused the boost back up, so that July last year formed a bull hammer pattern, and we saw prices reach their recent high in November last year, the highest we've seen since ever. Since then we've pulled back down, but we're still within last November's monthly range. Interestingly, recent prices pulled back despite on a closing basis, because though the market pushed up over the middle time of the bullish Andrews pitchfork, currently 224.15, and notably over the upper time of the bullish shift pitchfork, currently 223.90, even closing over the latter, if only just the once, it was obvious that the market was not happy up there. Hence, the pullback down. All this action, nevertheless, leaves us with two potential topside targets based on the action we've seen so far, and also a possible caution from me for some action to come. If we consider the late 2019 to date action as a possible bullish halfway hesitation, which isn't fully certain, but still does have some merit as an idea, well, if we consider this, then we have a possible target X in the 245.85 area. However, this is a primary target. You see, I'm inclined to disregard that long tail on the hammer pattern formed in July last year, and instead utilize the low around the 180 area, in which case we have a higher secondary target X1 in the 264 even area. Both are big asks, but that is what the current pattern looks like. Now, important, finally, a caution. This month, January 2022, we have a crossover of the upper tine of the bullish shift and the middle tine of the bullish Andrews pitchfork. Both are the same move. Crossovers usually are a volatile time, so I would caution you to watch out for any or all of the following. Obviously, volatility, but also changes in trend, or even confirmations of a trend, or even all three of these. Just watch out for this month, and also for the next crossover in August this year.